Any avid watcher of the real estate headlines will not have to go too far to find a news story about Lake Nona. The desirability of this commuter-friendly area has caused people to flock. The old adage is true here again, where developers traded cow pastures for gold. And as a result, the headlines time and time again pointed to how fast properties appreciated in this particular area. I starkly remember headlines through the pandemic era that were carried at national level, pointing to Lake Nona as being the #1 place where rents grew the fastest in the entire US at a time when the cost of everything was skyrocketing. And why? Because it's popular. And today, whether you live here now or you're considering making Lake Nona your home, I'm gonna do two things. Number one, I'm gonna do a complete data deep dive so you understand exactly what's going on. But first, I'm gonna cover 90 seconds of the top development and growth news going on in Lake Nona right now. At the heart of Lake Nona's ongoing transformation is Adventhealth, building a $423 million 10-story hospital on Narcoossee Road is scheduled to open in 2026. This will be complemented by a 105,000 square foot medical office building and 30,000 feet of commercial space. And Adventhealth hopes this project will set a new standard for healthcare in the region. Meanwhile, just down the road, new developments in Eagle Creek community are enhancing Lake Nona's appeal. Altamont Springs-based Emerson International is bringing a fresh phase of retail and commercial spaces to the area. The plans here include 5 buildings with 81,000 square feet of commercial space featuring a mixed office retail and a standalone restaurant on roughly 8 acres. Now, this complements earlier phases of Eagle Creek's development, which of course now hosts popular tenants like Meat Wonder Food, Smoothie King, and Centennial Bay. Now, when you talk about the Lake Nona region, you must mention the ambitious Sunbridge development. And we have breaking news that it looks like Taylor Morrison will be first up to bat to break a community in this neighborhood with 526 homes. The 24,000-acre Sunbridge community will blend nature and vibrant living, offering trails, resort-style amenities, and homes designed with unparalleled craftsmanship. It's all part of Tavistock's continued vision for a sustainable and connected community. And additionally, the Sunbridge Parkway extension promises to improve connectivity between Orange and Osceola County, easing traffic and paving the way for growth. This crucial infrastructure links new residential developments, a planned 1.9 million square foot logistics center, and a larger vision for the Lake Nona St. Cloud corridor. While everybody's not exactly happy that Parkway is coming, it will definitely make traveling around this area a lot easier than it is now. All right, let's get into the data deep dive. I'm going to break down 32832 first. Then I'm going to go into 32827. There will probably eventually be chapters on these two zip codes so you can kind of separate and go where you want to go. Unless you just want to see the whole thing. But look what we're going to show you. The data, by the way, you're going to ask, where did you get this from, Jared? This is the most recent data from the back end of the Florida Association of Realtors, the data that it provides us from all the transactions that are going on in these areas. This will be the most accurate, most recent print that we have right now in these two areas. Now, if you look at the chart, I'm going to show you, look at the left side. This is starting in January of 2017. This is the pre-pandemic time. Then all of a sudden 2020 hit and the pandemic. We lowered interest rates, the market got crazy hot, and here we are now. Now, I do want to point out something unique. If you look at data and you look way back in time, and there were way less residents living in a specific area, that will also matter, right? So if we build a whole lot more real estate, 5 years later, there's double the amount of houses, then you would expect certain charts to be higher as a result. Am I right? I do want to give you a specific distinction. When counting housing units, 32832 had much less growth than 827 did over the past 5 years. In fact, the housing units in 832 over the pandemic season, even though there was hyper construction everywhere, it only went from 11,600 units to around 12,000. So it's almost a negligible move in the 832 side. It had already been built out. And again, if you don't agree with that, that's directly from the US Census Bureau. Take it up with them. Could be wrong, could be right, but should be reliable. So we are looking at the more stable of the two markets in terms of added people and added housing units. Preserve your equity, list your home for just 3%. Call Jared Jones, local resident, top selling agent. Do not pay outdated models of commission. I've been warning you, don't do it. Things have changed. Call me today, save thousands. Make one call, that's all. List your home for just 3% and start packing.
Jared Jones is the way to go. Call 706-5000.
All right, the first chart we're going to look at is median sale price. You can look at price by median or average. I like median because it's unaffected by the extreme ends of the graph. So if you're in a high-end area and you sell a bunch of multi-million-dollar homes, a median sale price cuts the middle. It's the most balanced, even Steven way of trying to figure out what is going on in the market. Look what you see, okay? This is very common throughout the Orlando metro area, is this right here. This is a 2-year run. What is it doing? It is flat. It's had some drop off in 2022, and it looks like it's just kind of gone really straight. So right now it's at 616,000. Look at the peak. The peak in June of 2022 was 652,000. And honestly, if you look down here in the data, last month, they met that number again for the first time the entire year. Actually, they broke through it. There was a 670,000 print in June. So June was very good actually for both zip codes in Lake Nona. But you can see when it's bouncing around, you're like, it's not that it goes up one month and down the next. The truth is down the middle. The truth is like, what is the trend doing? Okay. And if you cut a trend from June of 2022, right now, you will see that the market is dead even. What does that tell us? It tells us that prices are straight, static. They're not going up. Sellers can ask whatever they want, but ultimately buyers are not purchasing at rates higher than where they've been in the past. So there's been a sticking point, a ceiling, if you will. And there's nothing wrong with this. A lot of people, if you hear the crash bros, they're expecting this to tank and to go down. But that's not necessarily the only way a housing market can find itself back in balance. The housing market can find itself back in balance if it goes sideways for long enough, and then it will take off again. Okay. Now you would say, Jared, have you run the numbers going back 20 years to tell us when, if the market goes sideways, when will it catch its legs again, where the market will catch up to the pace of such overnight appreciation in 2020, 21, and early 2022? It would take till 2026. Okay. Did the math. If we roll sideways till 2026, the market will have caught really where it's at. And I honestly think that's probably what's going to happen. Data shows we got a 2-year trend that the housing market looks like it's just going to be even. I think ultimately people are really waiting on it to do one or the other. You got buyers thinking it's going to go down. You got sellers praying they think it's going to go up. I think beyond that, the low interest rate environment is also causing some of this to freeze up. And I will digress. But I want you to know you had a mid-year peak and then it's flat. It is flat, folks. And that's where price is right now. All right, my friends, the next graph is active inventory. I like to call this graph unsold inventory. Now, this is unusual for the rest of the housing market in Orlando. Okay, now I'm going to tell you why. If you were to see, look at this pre-pandemic inventory. If you watch the news, everybody's watching to see where housing markets are above this mark. Okay, so there's this running narrative, there's a running interest to find the 10 states that are now above pre-pandemic levels. That was a headline that just recently came out. Why? Because the concern is if inventory goes above a market's normal and buyers are a little slower, and they are throughout the country, a little less buying activity, then that could become a problem for a market. But look at this. If I were to pull up the Orlando Metro chart, you would see the numbers pre-pandemic right here, and you would see this way up here. But look where it is in 832. It is tame. The other thing I would show you too is most of the markets through Orlando, especially the growing markets, okay, you would see that for the past 15 months, it didn't have this trail off. Look at this. 4 months going into 2024, it was dropping. Unsold was going back down. So it was like it stayed in this range for like a year and a half. And obviously through moving season, sellers are pushing more houses in the market, or buyers are just backing away, and there's not necessarily more sellers, but buyers aren't there to buy the houses, so it's going up. So essentially you see it, but look what's happening. I would say in a 3-month trend, it's gone flat again. So it rose, you put some more inventory on the market, but the problem is it's still not above pre-pandemic levels. This is the fascinating thing that we're seeing in the marketplaces like 832, when there wasn't a lot of new construction. There weren't a lot of houses added in the past 5 years in this area. Same thing with Winter Park. Same thing with Windermere. So you have these areas that didn't have open land, or at least buildable land that people could grab and take and add a bunch of houses to. In those circumstances, the market is still not way elevated in terms of how much unsold inventory it has. It's still really kind of below where it was in 2019. All right, so I just showed you a chart. Unsold inventory has been climbing for about 5 months straight. Is that because of a deluge of new seller listings, or is that because buyers are backing away? So let's look and find out. Look at this. This is the new listing trends. Okay. Now, this is fascinating to me because look at down here. Look at the trend. Is there a trend of more sellers listing against last year, or is it a trend of less? Look what it is. This last month, negative 27%. The month before that, negative 31%. Oh, great. We're up 22. We're up 11, but then we were down 12. We're up 37. We're down 18, down 6, down 2. You are turning in a slower year in this area for listings hitting the market. That's a fascinating thing. Now, we haven't looked at new pendings, or we haven't looked at the buyer side of the equation yet, but we already are starting to figure this out. If our active inventory is climbing, the amount of unsold homes are climbing, and it's not because sellers are pushing them to the market. There's actually less. If there are less sellers bringing inventory to market, you shouldn't see inventory of unsold homes stacking. The only remaining reason is that there's a buyer demand situation. The buyers have actually pulled back in the marketplace, and ultimately it ties everything together. It also brings to mind, why is pricing flat if we don't have a lot of inventory? There's not a lot of supply here. Why isn't pricing growing if there's few choice? There's less choice than there was 5 years ago if you come in the market and want to buy something in 832. You understand why. Because there's tepid demand. Now, I do want to point out that all throughout the other markets, this is not the truth for 2024. 832 has a down season, less inventory coming to market, which is unusual against last year. Last year was low for this market, but it got lower this year. Everywhere else in Orlando market was low last year, but the arc went higher this year. Almost every city and zip code in the metro did not perform like this. Leads me to believe that I think there is a good chance that there's a little bit of a correction in this area next year. Okay. This tells me that I think there's an opportunity for probably more sellers who clearly have put their plans off for 2 years. They're going to be like back in the market saying, all right, it's time to release it. And if you are a buyer in this marketplace where there's at least a little bit of an anemic demand, you might have, might be good buying season coming this spring of next year. Hey, it's me interrupting myself. You considering selling your home? Make one call, that's all, and put my nearly 23 years of experience and nearly 4,000 homes sold to work for you.
Jared Jones is the way to go. Call 706-5000.
Next up, and not a surprise, look at closed sales. Down 36%. So it was off almost 40% last month, down 18%. By the way, don't quibble too much about October. We had Hurricane Milton come through, and this affected almost every marketplace that we see. But there are a lot of negatives. It was also down negative 40% in June, 20% the month prior, negative 26%. Look at all of moving season. All of moving season in this market was down. Buyers were out. And I won't pull it up, but I will tell you the same phenomenon is happening as well in this marketplace. It's happening everywhere in Florida. Cash sales were down for the last 8 months. In this marketplace, cash sales were off by 30%. And I will say as well, which kind of took me by surprise, there were months in Lake Nona, in this particular zip code, where there were only 12% of all buyers were from cash. Most of the areas around Orlando, you see 25, 30%. But barely for a month or two did this market even go above 20%, which means this marketplace relies on 80 to 85% of its purchasers with mortgages. Okay. In a high interest rate environment, that is also causing some of the challenge because there's a little bit of a pullback in the cash. You can't rely on the cash buyers, and there's very few of them. And on top of that, when the interest rates go high, it makes it a little bit more challenging. So sellers here this year have seen a little bit longer time frames. They're most likely giving a little bit more at sale in order to get the sale closed at certain months. And so you see the dynamic swinging a little bit more towards the buyer favor. Now look at this, something that is not below pre-pandemic levels. This is fascinating. So look at the history. What we're looking at here is called months of supply of inventory. This is more fun to look at than just active inventory. Months of supply is essentially this. If you stop listing all homes in 832, based on how anemic the buyer activity is, how long would it take to sell them all off? Look where it is. The number just punched a 3.4, and this is a number that you have not seen in this marketplace, and it's going back to 2017. So now you start to see this is a feel indicator. This is a indicator that shows you, okay, maybe you don't have high supply, but how does it feel to sell a home? And right now, the feel is elevated versus history. Now, I got to tell you this, 3.4 months of supply is low. It's not low for this market, but it's low. This is a hot market with high demand, and it never really goes this high. But what this does is, as agents and as sellers, we have to think about that, because we're going to be in our heads saying, man, this is turning. This doesn't feel right. It hasn't felt like mud on the wheels to sell a house in this market ever. And now there's a little bit of some headwinds. And that's really because there's more competing inventory and a lot fewer buyers. And again, I've said this before. You say, Jared, what does this mean? The higher this goes, the more buyer control the market is. The lower this is, the more control a seller has. All this shows you is that 4 or 5 months running, it's been moving towards the buyer, except last month. In September, you notice why this bumped down. Interest rates went from like 7.25% down to 6% in a single month. Soon as October turned around this following month, it shot back up, and look what happened to the month of supply. It returned up again. So, in a market like this, that's not surprising when it's super dependent on finance buyers. When interest rates are high, this can continue to kind of slow things down. All right, now we're jumping the other side of the street, 32827 in Lake Nona, and we're going to start with median sale price. Now, I do want to point out up front that unlike 32832 next door, 827 saw massive growth in housing units over the past 5 years. Now, get this, over a 5-year span, 827 went from 4,600 housing units, 4,600 to 7,100 housing units. And again, this includes any ownable, any rentable structures. This would also include apartments. The point is, there's been way more growth in terms of the population, in terms of potential housing units to sell in this side of the street than the other. And that's a factor if we're looking at pre-pandemic numbers. And now there's way more units to be put on the market for sale. Then things can at times look elevated when per capita it may not be. Now, this is a fascinating chart. Take a look at what you see, okay? This is pre-pandemic. Then we had this super low interest rate. Everybody got some PPP payments and all this kind of stuff. Look what happened to median price. What do you see? It's largely flat with a big dip right here in the middle. And it looks like it's trying to regain itself, but look at the marketplace high. The marketplace high was 925,000, and it tailed off in 2022. It's a fascinating story we're going to see unfold as to why this took place. And over time, look, you can see it's gradually gaining steam. And it's not quite back to 900,000 yet, but it shot way up and then again, lost some ground. And it's kind of like you look at a 2-year span, you step back and you look. If a buyer bought right around this time period, they're most likely somewhere, maybe even short or relative to what value was again 2 years ago. And that's a fascinating thing that just tells us that there's a ceiling. Okay. A lot of people think, oh, I bought my house in 22. I'm going to relist it for 50% more. And you have to look at the comps. I mean, maybe your house overperformed, but largely it's been very stable for 2 years on the data. As you look down the trends, it's all positive. So this is a fascinating thing. This is not something you see on every chart for all the markets of Florida. They're all up months. They're positive territory for 2024. But again, it was running against 23, which was dropping. So obviously wasn't hard to report positive numbers against a year like that. Now look at the active inventory. This was like overnight hit the brakes. Now again, this marketplace had very tight supply. Look how small the numbers were during the peak pandemic months. 18 homes for sale, 20 homes for sale. It's at 130 homes for sale now. But look what happened when the interest rates went from 3% in the middle of 2022 to like 7.5%. The market inventory went straight up. This is very, very unusual. The marketplace had to deal with that. Obviously, we saw what happened to median price during this time. And this chart is visually stunning, right? Sponsored by SpaceX. It went straight to the moon right here. And it leveled off. There's like a year to a year and a quarter maybe where it just found a balance at 100 units, give or take. And then you're on a 4 or 5 month run now where unsold units have been stacking. And again, no matter the fact, the rest of Orlando, it's been going up for 15 months straight. If you look at any of the growth markets around Orlando, areas where there's increased housing over the past 5 years, like 827, it's really it went from here and it's just been going straight up. Most of the very popular zip codes, unabated, 15 months, maybe 1 month they dropped a little, but unabated for 15 months. So this is, a late breaking change where, this was running around 100 units and now it's around 130, 140 units. And again, we got to see why that is. Why is the marketplace changing in 827 through moving season? Why are they adding unsold homes? Is it a surge in sellers or is it buyers just pulling back? Maybe there's not a big number of sellers like there was back here, sponsored by SpaceX, but maybe it's just a fact of buyer pullback. We'll figure it out right now. All right, so this is the indicators for how many listings are coming to the market. You can see that as of late, if you balance all of this out, there's up months mixed with down months against last year. So in 2023, there was just a reasonable amount of listings. And then in 2024 on balance, it looks tracking really close to 2023. Again, you can see a lot of people were racing to the exits in 2022. The listing volume just went off the charts as things were changing. And the Federal Reserve shifted to fight inflation. A lot of people decided to put their house on the market. Now, the next chart we're going to look at is closed sales. And let me bring one point up as we talk about buyer activity in this particular market. I'm not going to pull up the graph, but one thing I will tell you that is bucking the trend, 827. This zip code has a renewed cash sales traffic. So much of the marketplace throughout the Central Florida area and in the state at large has seen a big pullback, a demise, if you will, a falling off of cash activity over the past 18 months. It has stayed sustained here. And this particular area needs it to be sustained because this marketplace as a whole runs 25, 30% of its transactions are all cash. So that's good news for this area. They have not seen the same fall off that the rest of Orlando has seen and the rest of the state. Now take a look at moving season in 2024. This is also much more aggressive than we've seen. And I have a feeling a lot of the transactions that you're seeing close out in 2024 was new construction. Okay. So there's going to be, I think, a volume of transactions in 2025, a little bit of a sense of a slowdown in its close volume because a lot of this is not surging resale traffic. So look at all these big numbers. You had a lot of positive activity in closed transactions versus last year. So this market, there was a good amount of turnover. This to me, when I look at everything on the whole, I look at the active inventory, I look at the pending traffic right now, how many buyers are putting deals under contract. I like the fact the cash is not soft, but I do think there might be a little bit more buyer headwinds going into 2025. I have a feeling it's just, again, looking at all the math and looking at natural trends of when things down cycle and up. I have a feeling that you're going to see the active inventory and this side of the zip code going a little bit higher into 2025. We'll have to see. Okay. As I look at all of this, I think there's going to be more listings hitting the market next year. And I do not think you're going to see the same buyer demand moving in. But again, this is speculation. This is my opinion. Chalk it up for what it is. All right, next up is months of supply of inventory. This is the feel of the market. This is how much energy the market has. Simply put, this is my favorite measure of supply and demand. This is the one everybody should watch because how you get to this measure, if you stop listing all homes today based on how many buyers are buying them on a daily and monthly basis, how long would it take you to sell out the store? And right now it is at 3.5 months. It has been far higher than that in 2022 going into 2023 for 4 or 5 months in time. But look where it was pre-pandemic. This market is used to 4 or 5 months of supply. So right now, I'm sorry, buyers, it is still a seller favored market compared to history. Okay. So right now you say, Jared, I see this as a 5-month climb. Yep. It's a 5-month climb. It's still below history. It's still down below what this market's used to running, which has a feel. Okay. If you're selling a home here, it feels faster than it did before the pandemic. It feels faster in the most recent relative normal time. Okay. And ultimately it'll feel tougher for buyers than it would have felt if you were trying to buy back here. Now, what I told you a second ago is I think this will continue to climb back towards normal. Okay. So again, if you're thinking of selling, okay, you're thinking of, I'm going to put my house on the market. I've been waiting like everybody else. I considered doing it back when SpaceX took off in 2022 and pushed in the market with everybody else. I waited. Okay. There's still a very balanced market, saying that even if you run another 6 months, you're just meeting where it was in the past. So, and again, very balanced. I would say in this marketplace for a long while, neither buyer nor seller has advantage. It's kind of going towards neutral territory. Now, one last chart I want to show you. This is 827. This is 832. Notice the difference in price cuts. Price cuts on listings in 827 is 20%. In 832, 37% of all listings in 832 have a price cut. 80 homes out of 214. Again, this is a pretty big number, okay? That's well over average. And again, what this tells me is that this zip code has to be more precise when they bring their house to the market. You don't have a lot of leeway. So there's a lot of people like wiggle room pricing their home. They go high, they find out it doesn't work. They have to be a little bit more dialed in. This side, less so. This side probably has wiggle room in their price and it doesn't matter, but not the case for this side over here. And ultimately, it's got some of the highest price cuts in the entire area. Look towards St. Cloud, they're much lower than 37%. 37% is higher for any market. If you're in the Central Florida area and you're looking for a great church, I'd love for you to join me at the Grove Bible Chapel. Just visit joinmeatthegrove.com for full details. When you're buying or selling a home, the process itself can feel overwhelming. When this happens, you need a real estate expert that can turn this around for you. So all you need to do, make one call, that's all, and put nearly 4,000 homes sold and my 23 years of experience to work for you.
Jared Jones is the way to go. Call 706-5000.